Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592, the website at allamericangold.com, and welcome to Wednesday. It's a short week. Tomorrow will be our last show of the week. We are closed on Friday and Monday. We'll be back on Tuesday. But don't worry, you can go out to allamericangold.com 24 hours a day, 7 days a week. Hit that shopping cart button and order all your hard asset needs anytime, day or night. I'm joined with my partner, Jason Walker, as always. And guys, I got exciting news. So yesterday we had our YouTube test. It went extremely well. We made a few changes, made some things better. Today, we are hopeful to have our first YouTube video put up online. And I know that we haven't been posting YouTube videos or our YouTube shows for the last week or so. Ramon had triple bypass surgery. Things are going well. Keep them in your prayers. Same thing with the website. All those articles, we'll get those updated. I'm really confident that when we come back next Tuesday, we'll have that back to normal as well. And let's not forget, next week, another short week because of the New Year's. So we'll be closed Friday, Monday, and then we'll be here Tuesday, Wednesday, Thursday, and then closed Friday, Monday again. And then we'll kind of get back into normal hours, normal business. But Jason, pretty excited about the YouTube.
It's going to be a lot of fun. I think there's we'll start slow and you just need to function to begin with. Joe and I this morning still trying to figure it out. And then once we're functioning, I'll dress up my backgrounds a little bit. I'm sure Joe, who's not worried about the place he's been sitting for years broadcasting, he might want to change his background. We'll make it look cool. And then, the sky's the limit. There's all kinds of things we can add on and hopefully more shows. We can do the Half Empty Cup of Joe in the future. We got to still have a few other hurdles, but it's going to be a building process. A lot of cool stuff.
Yeah, a lot of cool stuff. And it's kind of interesting because Jason and I can see each other now, which, you think about, gosh, we've been doing this show together for over 4 years, 4.5 years. And outside of the few times that when I'm in Colorado, we never even see each other. So it's kind of neat. We can actually communicate with each other. We're learning, as Jason said, I've been having to move stuff around, but we're going to get it fun. We're going to have a lot of fun with it too, and we'll do some cool stuff for all of our listeners out there as well. But as we wrap up 2022, what a year it has been. Before I forget, in case I forget tomorrow, Merry Christmas to everybody. And I hope you just have a wonderful holiday. We've got my mom and my son, my older son, Joey, they're flying in today, trying to beat the bomb cyclone, as they like to call it. Yeah, it's called winter. We've had it a lot of years. It's funny. We've had winter, as far as I know, for thousands of years, but this is what they love to give it bomb cyclones and all this stuff. Now, I know this. Let's not kid around. It can be dangerous. Colorado is going to have extremely cold temperatures tomorrow, and especially when that wind gust. And same thing, Joey, my oldest son, you guys hear Joey on the show all the time. He lives in Chicago, so they're expecting winds, 50, 60, maybe even 70 miles an hour. And when you're below freezing as a temperature, and then you throw a wind like that, Jason, you could have wind chills like negative 50 degrees out there.
Yeah, I don't even know Wyoming, Montana, North and South Dakota. I don't even know how cold it's going to be up there because I'm just paying attention to Colorado. But last thing I saw, -2 is going to be the high tomorrow, and then -16 to -20 could be the low. And a couple of weather forecasters are saying that this could be record wind chill, -50, -55 in the Denver area, and on the Eastern Plains, I guess it's going to be really bad. And of course, I was talking to Joe this morning. He's like, they're going to throw all that mag chloride stuff down. It's going to melt the snow. It's supposed to be this really light, dry snow. They probably should just plow the roads, not put that mag chloride down. But they're going to put that down. It's going to melt and immediately freeze, and then you're going to see cars all over the ditches. So if you're driving around, Jason, tomorrow, guys, be careful.
Yeah, Jason's saying that Colorado highways are going to look like a bad NASCAR race, wrecks everywhere. So be careful out there. You know what? And I just think about the guys out there because we're procrastinators. We hate shopping, and I'm generalizing. I am a procrastinator. I hate shopping, so it's going to be tough. Here it is, right before Christmas. You got to get those couple last minute gifts. Be careful out there. If you can, get it done today because it sounds like it's going to be pretty nasty all the way up going to Christmas. Here in Arizona, the other day I was talking about, oh, it's so cold. We turned the heat on at the office. It's going to be a high, I think, of 70 on Christmas Day, Jason.
Well, and think of this. So a lot of people are just going to avoid going out on Thursday. And then, like I've said on this show before, Joe, I think there's going to be a lot of very late shoppers. They can't afford to buy their presents until that Friday paycheck drops. So no one's shopping Thursday. A lot of people are going to avoid it because of the temperatures. But then what? They get their paycheck dropped on Friday. There's Christmas is 2 days away. I can't imagine what the shopping is going to look like on Friday in Colorado, Joe.
Yeah, that's those are things I try to avoid those like the plague. Listen, when we get back, we got to talk. We got an update on housing. Even slower than they thought, and they knew it was going to be bad. We also got an update on oil. We heard the administration said they are going to start filling the reserve again. Come to find out, they're still pulling oil out, and this week it wasn't enough. We'll talk about that and a whole bunch more. Stay with us, Patriot Radio News Hour. We'll be back right after the break. Welcome back, Patriot Radio News Hour. Joe and Jason. The Dow is up 560 points. The first up day here in a while. Nike said, hey, you know what? We lowered our price. We got rid of some inventory. FedEx said, hey, things aren't great, so we're going to cut another $1 billion. So more job cuts coming to FedEx. Apparently, that makes Wall Street happy today. I don't know. Probably just some buying because the market's been down for so many days in a row. Gold and silver are flat. So gold 1817, silver 2405 right now. This market recap brought to you by Why Refi. Tomorrow on the Half Empty Cup, Jason and I will dive into Why Refi for about 10 minutes, give you some more of it. Things are going very, very well. I just had them in my studios yesterday. They're really elated. We got some great things coming right now. As you know, you need 50,000 is the minimum, and you have to be an accredited investor, which means you got to be a millionaire on paper in the next 30 days or so. I've been talking with these guys. They've been working on this. They're going to open it up to everybody because I said, listen, I got tons of people that are really good at saving their money. They may not be millionaires on paper, but they've got 50,000. Why shouldn't they be able to get great returns that aren't tied to Wall Street? I mean, this is what it's all about. I think that's going to happen, Jason. I'm really excited that a lot more people are going to get the opportunity to do the greater good. And tomorrow, me and you will break down how it all works for them. But check them out. InvestYRefi.com. That's the word invest. The letter Y, REFY.com, or 888-YREFI-24. Jason, we got existing home sale numbers out this morning. They were expecting it to be bad. It came in worse than expected, down 7.7% month over month. So this is the 10th straight monthly decline, the largest year-over-year drop since Lehman Brothers collapsed, the longest streak of sales declines going back to 1999. And I don't know that there was anything interesting there. My guess is that's probably when they made some changes and started collecting data the new way. But the 10th straight month of declines. Here is the thing now, 4 million. Which that's the annualized rate. And I got the feeling, obviously, in December, we're going to break that, go below 4 million. That's just a huge drop. Sales now down 36%. But one of the big areas, the West, down almost 50%. Here's the kicker, though. Home prices were still up year over year, but the price now much smaller, up about 3.5%. The average sale now $370,000. Supply is starting to tick up. 1.1 million supply. They're saying that's about a 3.3 month. So the inventory level still not huge, but Jason, all these numbers are all trending in the wrong direction.
Yeah, I saw a report last night in Buena Vista. I think it's a mountain town here in Colorado. Somebody bought an apartment building, and I was looking at it, like one of those 10 plexes, maybe 12 plexes. It's an older building, but the new owners basically just doubled the rent, and said, "Well, if you can't handle it, please leave." And they did all this during the Christmas holiday. I mean, that's how tight things are getting, Joe. They know that they can get double rent. They bought the building. They didn't do anything illegal, but it's a sign of what's getting ready to happen. Somebody bought the building. They want to invest. They know rents are going up. I think the old rent was $950 for these apartments. Now it's $1,800, and they said just pay it or leave. They got a letter,
and they're going to get it because $1,800 isn't that expensive anymore. That's a big part of the inflation number, and people are talking about rents cooling. And I hear that a lot. I see a lot I don't see that. At least no. I know, Jason, you're up there in Denver. You're saying it's not happening here in Phoenix either. Gonna be very interesting. But again, remember, this is about the arms and the legs of housing. Not only do you have new homes, the existing homes, the mortgage market, the realtors, right? All the guys that do the financing behind the scenes. And it's starting to see, we saw it in permits yesterday, even the multifamily, which is, let's face it, they're throwing up apartments left and right. Even that saw a huge slowdown there. So it's just one of these signs that, again, I said it, I actually think in January, don't be surprised if in January we're talking about like a 50% decline, because remember last January and last February, everyone was trying to beat the first Fed rate hikes.
I remember that, Joe. Absolutely. And look at how much demand destruction has to happen for this to go down the way it's going down. I mean, Buena Vista, that's not like a happening city or anything. I mean, it's a fairly popular mountain area, but some guy bought the building and doubled the rent. That's not cooling, Joe. That is not cooling rent. And I think what you'll see is a lot of people moving into renting. I think a lot of home renters and homeowners are going to have to move into these apartments. And so apartment rent's not going to cool off, at least not around here, Joe.
Yeah, it's going to be really, really interesting how all of this plays out. We keep getting all of this data, all these data points about people moving back in with mom and dad, the multi-generational living. This is something, the United States used to have that, going back into the 1800s, right? When people were like the Statue of Liberty, right? And people were flocking into the country, and you'd have families living together. My mother, as an example, it was grandma, her parents, her and her kid, and her siblings living together. And it was all of a sudden that was kind of where it ended. And we saw a huge decline all the way. And guess what? All the way to 1971. All the way to 1971, where multi-generations living in the same household, when you're talking about adults, it was in the single digits, right? So if you were over the age of 18, you were essentially, outside of the kids that were, maybe coming home on college break, outside of those kids, less than 10% of adults were living with their parents. Now, Jason, they're talking about this number is approaching 25%. And again, it's just think about this. right? We closed the gold window 1971. The central banks have been doing nothing but creating debt and debt and debt and making everything so damn unaffordable. And now look at us. We're talking about, hey, 1 in 4 adults, I'm talking adults, are now living with their parents or being financially supported by them. You know, let's face it, there's some parents out there, hey, you're not living here, right? I'm willing to write the rent check so you don't have to live here anymore. It's insane.
I saw that number a couple of weeks ago. I mentioned something similar to that number, and it measured from 18 to 30 to 35, and then another number was 18 to 55. If you go all the way to 55, Joe, the number gets a little bigger. You have grandparents, great grandparents living with their grandparents, so to speak. But it's interesting. You go back before 1971. You talk about how people stopped living together as much. After the 1970s got up and running, that's when personal credit cards. You remember, people didn't really have credit cards in the 70s or the 60s.
Really didn't exist. Credit cards.
They got really everybody into a debt trap, didn't they, Joe? They got everybody into all this. Hey, you can move out. Just have some plastic, right? So everybody got into hey, everyone's doing better. Hey, my sons, my grandsons, they're all doing better. Look, they got their place at 18. Look at this. But if it's all on plastic, if it's all a loan and a payment, Joe, it was fake. And now look how we're far down the road. And look, it's all this debt is not paying off, is it?
Think about this for just a minute. 1971, just the median home. Okay. Today, I told you existing home sales, the median price, $370,000 in change, but let's just call it $370,000. 1971, the median home in a brand new car, and I mean a decent brand new car, like possibly a Corvette. Okay, 1971, median home and a brand new Corvette, about $30,000 for both. The median home was about $25,000. Corvette, let's call it a decent, $5,000, right? $30,000. Fast forward to today, $370,000 now just for the home. Throw the Corvette on there. Let's just call it $500,000. We've gone from something that was $30,000 in 50 years is now you need $500,000. And this is why it's no shock. Why do so many from 18 to 55? And they even broke it down saying 24 to 35. So that's okay. You're an adult, right? 18, 19. My youngest son just turned 20, and technically he still lives at home. He's a sophomore in college, right? My 23-year-old son is like a rarity. Not only does he not live at home, I don't pay for nothing. He pays his own bills. That's hard to come by. And this is why. And the reason, what's so funny is nobody seems to want to point the finger at where it needs to be pointed, which is the central bank. They're the ones that created all this stuff. Before we had a central bank and we were on the gold standard, hey, guess what? Inflation didn't exist. It wasn't even a thing. The only time you had inflation was war. And as soon as the war ended, guess what? Everything went back to the exact same price before the war started. That doesn't happen here anymore. Even if they pretend to get inflation under control, Jason, we know everything just went up a lot more and stayed there. Okay, it doesn't go back down to where it used to be. We just get used to, well, you know what? Hey, gas $3, $4. Just get used to it. That box of cereal, it's half the size and twice the price. Get used to it.
That's right, Joe. It's becoming very unaffordable. I had a guy who used to trade coins, sell coins back and forth too. He was a younger guy. It's been a few years since I've really done any business with him. But he was a go-getter. This guy worked hard. And I think, and I could be wrong, 23, 24 years old, he bought his own house. Not married, no kids. He just really gutted it out. Really was just a hustler. You see a single woman or man buying a house in their 20s, it's like an oddity. It's people scratch their heads like, how does that even possible? And it used to be, Joe, that you could do something like that in your 20s. Now what you got people loaded down with college debt, and then they'll load you up with more debt as long as you can make the debt payments out of college. But it's all about a debt payment.
Credit card debt. Oh, right. You want a car, auto loan debt, right? Car insurance. It's so incredible. Think about it, we're talking about cars. A decent car in 1970 was $3,000. A huge car loan, huge, brand new car, 36 months was like, okay, wow, we were really stretching you out here. Now they're talking about, dude, you get a car, you got to have an 8-year loan just to get the payment to be $900, $1,000 a month.
Yeah, I'm a buyer and driver of Toyota Corollas. It's if you just say the word car, that's kind of what you envision. There's been more Toyota Corollas made than any other car in human history. It's just the cheapest per dollar per mile. And so that's what I buy, especially with my previous jobs driving. And I think in 2001, Joe, I bought a brand new 2001 Corolla. I had warranty and everything on it. I had, a couple hundred miles on it. I think $11,000, $12,000. That's just a Toyota Corolla. Today, I think that you're looking $25,000, $26,000 for a Toyota Corolla, Joe.
Yeah, base model, right? Yeah, no bells or whistles on that thing. Hey, we're going to be right back. We're going to talk about oil when we return. 800-951-0592. Still got platinum still available. Keep buying it. Remember, Jason and I issuing an all-out buy. We don't do this maybe once every couple of years. This is like a rhodium situation in the past. This is something where we expect what we call them the other metals, right? So you got palladium, platinum, rhodium, kind of the other metals. When we feel that there is a significant, two things have to happen for these all-out buys. Number one, it has to be, in our opinion, significantly undervalued. Obviously, platinum fits that. I mean, platinum historically is more expensive than gold. Almost always, and only a couple of times in the last 50 years, outside of the last few years, had that ever happened, and it was only for a brief period of time. This is by far the longest stretch where platinum has been below gold, and really, when you think about it, it's like $800 below gold right now. And then the next major factor, supply. And part of the reason that platinum got so low is it was extremely in oversupply territory. And there was a lot of factors involved with that. Those factors are gone. And matter of fact, we're anticipating a major supply deficit for 2023. So we think there's going to be a big upside here. This is one of those plays where you add some ounces, wait for the pop to happen, and then turn around and trade it for some more silver or trade it for some more gold or just sell it and take the profits. But we've got 1 ounce platinum bars. These are going to be Johnson Matthey and Ingle hard bars, so the best of the best. They're at $1,150. And then we have the 1 ounce platinum eagle. That is a U.S. 1 ounce platinum eagle. And that is the coin. Those are at $1,200 right now at 800-951-0592. Now, I don't think this is going to be like when we did it with rhodium. You know, rhodium was $500, $600, $700, and it went to like 30,000 at the high. Right now, you know, rhodium's like at 10 grand. That's kind of what I would say is still a little high, but you know, fairly valued. But I do expect platinum, a doubling of the price here, Jason, very much in the cards.
Yeah, rhodium is, if I remember right, Joe, it's really, there's not really such a thing as a rhodium mine. It's kind of a byproduct with platinum and palladium. And I think it's South Africa and Russia are like the two major mines for rhodium. And so it's just very volatile. It's hard to get, just very rare. Platinum is, like you've said before, Joe, there's less of it than gold. And it's kind of it's a head scratcher, what's going on with platinum over the last few years. We haven't offered it very many times. When we've offered it, we've got a lot of sales because people understand that if it's a buy and hold and you wait just a little bit, and right now this may be the last period of time before platinum rejoins its value versus gold. You're supposed to buy it when it's cheap, Joe, and buy it when nobody else is buying it, right?
Yeah, absolutely. 800-951-0592. Last week we had a big build in crude oil, but then we found out, oh, wait, they're still releasing oil out of the strategic oil reserve. And then all of a sudden, late, I want to say Friday and Monday, they're talking, oh, we're going to start refilling it. Well, it's Wednesday. We get oil inventory every week. This time, a huge supply deficit. It's about 6 million barrels, which just kind of tells you, in my opinion, they underestimated last week, overestimated, kind of the two probably washed each other out. But here's what was interesting. Down 6 million, and they still pumped out almost 4 million barrels out of the strategic reserve last week. So if you didn't pump that out, what are we talking about? Down 10 million barrels? I mean, that's just not sustainable. And I find it interesting that they're talking about, oh, we're going to refill it. And yet every week they're still taking it out. The low, obviously every week we set a new low water mark since we began filling the thing back in the 70s. I think we're down to like 1982 levels or something like that. But again, crude's up, crude oil right now, almost $79 a barrel. If China reopens, which they are reopening, it's slow going, but they are reopening. In this cold air, we'll see. We're going to need big demand destruction, I guess is my point. We haven't seen enough of it yet because we're still down 6 million barrels.
Yeah, Joe, it makes me wonder what was being said when Joe Biden went over to Saudi Arabia earlier this year. Right? I'm sure there was something was agreed to at that point, which is contributing to what we're seeing now. It's pretty obvious to me.
Yeah, and again, we talked about this a little bit yesterday on the half empty cup between not building refineries. We talk about energy independence. That's just not the case. We're producing about 12.5 million barrels of oil a day, which is, by the way, right near the all-time record high. So I think the all-time high, I think 1 week we got to like 12.8 million, but 12.5, that's like we're at record oil production here in the U.S. The problem is we consume almost 20 million, 19 million in change. Obviously, we get most of that comes from Canada and Mexico. But the realities are, even if we wanted to produce more oil, we can't refine it. Matter of fact, a lot of the oil we're producing now, we actually have to ship somewhere else because we don't have the refining capacity here because we don't build new refiners. I mean, we did build one in North Dakota, but it only does 20,000 barrels. I mean, that's like, unfortunately, I know 20,000, that's a lot of barrels, but not really.
Well, that sounds like something for supply chains is what that sounds like, something to shore up the supply chains. Why do I get the feeling, Joe, that the deal that I'm referring to is probably, hey, you're Joe Biden, you hold on to those dollars and we'll buy your oil. Why do I think that's what the play is here? And why do I think we're going to continue to import oil here?
I want to ask everybody out there, listen, we could be paying 99 cents a gallon for gas right now. Absolutely could. Would you rather pay? And again, think about this. And I know gas prices have come down, right? They're I think I filled up yesterday for less than $3.50. Okay, so that's been the cheapest here in Arizona in quite some time. But we've drained the strategic oil reserve, right? We're not keeping up, and I think this is going to come to light here. This is probably the calm before the storm, because in the winter we do see demand go down because it's cold. Like Jason said, hey, no one's going to drive in Colorado tomorrow because it's going to be freezing out there. What if we just had built more refining capacity and you could pay 99 cents? Would you be for that? I would be. But hey, they're not. So there you go. We'll be back. Patriot Radio News Hour. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. Remember, tomorrow will be our last show. We're really excited. Today may be our first new YouTube video. If things go well, may not. We may have a hiccup or two, but we're really confident that if it isn't today's show, it's going to be tomorrow's show. So it'll be pretty interesting. We're excited about. We're still working things out, and we'll keep making it better as we go along. How about this? The layoff. So first, FedEx said, "Yeah, we're going to cut another $1 billion." Then Tesla today, which already has said, "Hey, we're going to let go 10% of our workforce," saying that they've instituted a hiring freeze, and that they are going to have another round of layoffs in the first quarter of 2023. So, Jason, we've had two pretty big companies, Tesla and FedEx, both announcing, hey, we're going to be swinging that axe again in the first quarter of next year.
Yeah, it's interesting with the recession that's, I think, it's happening now, but it's going to be even worse next year. The tech companies tend to be kind of a leading factor when it comes to, because when you can't buy stuff, Joe, with the inflation on top of it, when you can't buy stuff, the first thing you cut back is on non-essentials. And there's a lot of non-essential tech stuff that you don't need. So they tend to see it first. So it's coming, Joe. This is a huge indicator.
Yeah, and we're watching these things, and I think this is something where a lot of the carnage that we're anticipating in 2023 is because that layoff axe is going to be swinging a lot more pervasively than what we've seen right now. And again, the Philadelphia Fed, let's remember, the Philadelphia Fed last week said, hey, you know what? We may have a problem in the BLM number, the Bureau of Labor Statistics, the Bureau of Labor Statistics number. Hey, we may have been overstating the amount of job growth. But again, maybe they haven't. I think everybody out there's a lot of hiring going on. Now, a lot of that hiring has stopped, but there's still jobs out there. But they're getting harder and harder to come by. And Jason and I both really think that after the Christmas holiday here, we're going to, don't be surprised in the vast majority of earnings announcements that are going to come out for the fourth quarter. You're going to hear company after company. We're going to hear hiring freezes. We're going to hear layoffs. Jason's already pointed out a lot of businesses, hey, the overtime went away, right? Or, hey, I was working 40, but now I'm only working 32. And all of those things matter.
That's exactly right, Joe. And then something I've mentioned a few times, I want to get your comment on, which is these. We reported these record amounts of warehouses being built. I mentioned a few days ago or last week that I was driving up and down I-25, doing some stuff with my wife. Warehouse here, warehouse there. There's tons of warehouses being built. And then California along the coastline. Remember all those ships that were sitting out in the ocean? And while in California, they're building records amounts of warehouses. And I think two things. One, they need to store more stuff. Number two, modernization. You have to have these robotic warehouses. So you have all these other warehouses burning down. Then I saw this yesterday, Joe, a report about how full the warehouses. All these warehouses are full. I even see Walmarts are building extra storage on the back of some of their super centers. Everything's full. This one company, and I forget which company it was. I was watching this video, Joe. They said to their distributors, "We can't accept the stuff you're sending, even if you give it to us for free. There's nowhere to put it, and now storing it costs 3 times as much." Can you imagine that? There's nowhere to put the stuff. That shows you that.
Yeah, and warehouse space is the cheapest space around, right? Because warehouse space is, hey, build the shell, right? Give me the 4 walls, put the roof on it, right? I don't need anything else. I don't need offices. We need a bathroom, but that's really about it. It's the cheapest space. But to your point, that cheap space is 3 times more expensive than it used to be. And it's going to be interesting. Let's just put it this way. When we're talking about gold and silver, the bigger the job cut axe swings, the higher the prices are going to go, because this is really, the job cuts is really what's going to determine the pace of rate hikes and really the slowing of the rate hikes. If the job cut acts is really big, the Fed's going to wrap it up quicker than a lot of people anticipate. If it's more drawn out, right, then Jason, maybe we get to the middle of the year before they're done. I said it last week. That was 2 weeks ago. That was my stance. The Fed was going to raise. May was going to be the last rate hike. I've taken that off the table. After what I've been seeing, I think March may be the last rate hike we see. And that's why I'm anticipating a very healthy start for gold and silver in 2023. And then any talk of ending quantitative tightening, any talk of lowering rates, Jason, that just adds to the fire.
Yeah, I think what you're going to see next year, Joe, a lot is going to be things of value are going to hold and go up in value, the price. And then I think things that have less value are going to drop in price. The inflation is going to go down a little bit next year, and then the Fed's going to talk about how they're succeeding. But I think what you're going to see is lower value items are going to go to, you have that demand destruction. But quality items, I think, are going to continue to hold the price or even go higher. That same thing about the Walmart. My wife and I went to Walmart, and the clearance section. There was one of the sometimes they have the wider aisles. The clearance section bled over, and it was going down the wider part of the aisle. The clearance section was exploded, full of stuff they just can't get rid of, Joe.
Yeah, they want to get rid of it now. Walmart knows, everyone knows, if we don't sell it during the holiday, we're probably not going to sell it. That's not a good sign. When we get back, I got a little gold special to go along with that platinum. And then, oh, by the way, another country putting gold away. I'll tell you who it is next. Final segment here, Patriot Radio News Hour. Joe and Jason. The Dow's still up about 500 points. The first big update in some time here. Gold and silver just flat today. Gold's $18.17, silver $24.05. We have the platinum bars, 1 ounce platinum bars at $11.50. The Platinum Eagle, the U.S. Platinum Eagle, 1 ounce Platinum Eagle at $1,200. And then on the gold side today, we've got $20 gold pieces, Liberties or the St. Gaudens. You know what? We're going to let you call it. You pick it. You can get some of each. You can get all Saints. You can get all Libs, whatever you want to do. 2075 at 800, 951 0592. And Jason, Australia's sovereign wealth fund, they are now the latest in adding gold into their portfolio. And listen to this, in an 8-page note. Now, listen, 8 pages is way more than a note to me, but in an 8-page note, here's what they said. For the last 4 decades, the investment tailwinds included falling interest rates and taxes, right? Of course, taxes were mostly for business and stock companies. Energy abundance and the growing globalization driven by China's rise. They're now saying that world is over. It's now a world corrosive to asset prices, more war, the risk of capital controls and confiscation. Listen, they're just flat out telling you what they're going to do. This is their sovereign wealth fund talking about capital controls, talking about confiscation. Jason, bigger government. And lastly, that specter that we've been telling everybody, listen, inflation's just going to be a lot hotter and a lot higher than people realize it's going to be. We're not going back to 2%. That's a bunch of nonsense. And Jason, listen, I couldn't say it better. This is Australia's sovereign wealth fund saying, hey, by the way, yeah, we're buying gold now because here's all the reasons.
That's right, Joe. And you're looking at inflation now that we're going to have multiple years of higher inflation. We're adding the numbers up as I've done a couple of times. And, it's bad enough if you have 7% of their CPI, but if it's added on to the 7% the year before, it gets worse every single year, Joe. I'm seeing it all around. Yeah, family, friends, acquaintances, people I'm talking to, customers, listeners, and the squeeze is getting tighter and tighter. I think at 2023 it gets a lot tighter, Joe.
7% last year, 7% this year. Let's just say we get to 5%. Right, and that's what they're admitting to. And remember, every time we talk about inflation, I've yet to find a company that said inflation was only 7%. I try to find it. Right? What did we do yesterday? Was it General Mills? General Mills, inflation for our stuff, 17%. But you start adding these up. All of a sudden, hey, 3 years, you've lost 20% of your money to inflation. Jason, it's ridiculous. It's absurd. And no wonder why the Australian Sovereign Wealth Fund says, hey, you better start buying gold.
Every year it gets worse. If you have a $100 item and it's 10% inflation, that's 110. If it's another 10% the next year, that's 11 the next year. Right. See, it climbs the ladder, doesn't it, Joe?
800-951-0592. Look for this video out on YouTube, coming to you shortly. Jason and I, though, we're coming right back with the half-empty cup. Jump over to 1360khnc.com and follow us there. God bless everybody.